Hello and welcome to Investors News Channel. It is Friday, April 28th, 2023. The goal of this week's newscast is to give you enough information where you can take it, do whatever you want with it. We try to break it down for you in the realm of real estate, tax, stock market, 401ks, business building, etc. So we've got a couple things we want to dive right into. The U-Haul. So we got a U-Haul to see where the migration patterns of the people are moving from and to, and we thought this was fun. U-Haul rates suggest migration from California to Texas is accelerating. So there's a lot of people obviously going from, well, not obviously, but if you haven't heard, people are moving from California to Texas and evidently moving out of California and Texas in general. But if you look at the for a one-way 26-foot truck, it's $4,000 if you take it from Los Angeles to Texas, and if you take it back from Houston to Los Angeles, it's only $1,000. But I did see on their website that they're actually paying people to drive empty trucks back to California. So I just think that I actually thought it was kind of funny. When we talk about interest rates in the real estate sector, I like to go to NerdWallet, and they talk about the interest rates. What I thought was interesting here is the 30-year fixed rate was 6.6, pretty much, 6.954, whatever, 6.594, and the 3-year was 6.1. So it's about a half a point difference. But the fixed rate is not that much more than the adjustable. And when we go to, we know that the Fed is going to speak next Wednesday. Powell's going to, decide next Wednesday what he's going to do with rates. It's the consensus of most people that I can tell that, including CME, which is a market report here, 85% of the people think that there's going to be a 0.25 or a 0.25% rate hike. When it comes to trying to figure out investments in general today, April 28th, 2023, what do you invest in? Great question. We don't give advice, we just give news. But I know that if you're in the stock market and you have money in the stock market or your 401k like we do, you have to be paying attention to it. So we're right now we're weighted heavily on that because there's not a lot of options that we like currently today. However, if you're paying attention to the real estate sector with the interest rates, there is, if you bought anywhere from a year ago, the last 3 years, anywhere prior to a year ago, in refinance, you might be hovering around, 2.8 to 3.8%. So, if the average is 3.2%, that's pretty good. It's pretty much, as I just showed you, it's kind of doubled. It's at least doubled since then. But a lot of people planned on that 3.2% payment, right? So whether it's the real estate, residential sector or commercial sector, with the commercial builders, it's a lot of those loans are going to become due, or money has gotten a lot more expensive. And there's certain people that I follow on this. I really like Kim McElroy. You guys see him all over our channel. Jason Hartman's good. This guy I've known about Pace for a long time, but he was interviewed by Ken McElroy, and this is his YouTube channel. It says he's got 1,700 videos. I watched a few of them. He is very good. He's articulate and he's good. He will sell you something, so if you don't want to be sold to, don't pay attention to that. But essentially what he's saying is you can buy he's got a website called Sub2, but you can buy Subject 2, which is subject to the existing loan. So for a lot of different reasons, whether it's death, divorce, job loss, just need to move, whatever, a lot of people need to get out of their house or even their commercial buildings, and will sell for what the loan amount is, or at least keep the loan in place. Okay. So a lot of people, he's saying he'll pay more for the property. He'll pay asking price while everybody else is trying to get the price of the house down, he'll pay asking price if he can take over the loan. So it's very, very interesting. As you guys know, I'm a big fan of, or you may not know if you're watching this for the first time, but disclaimer, I am in Cody's mastermind group, but Cody Sanchez is very good when we're talking about things, what we can invest in, things that are good today. T-bills. T-bills are about 5%. And so we got money in T-bills, and we're not right now, other than the heavy weighting that we do have in the stock market. We're searching for deals, trying to figure out what to do here and there. And buying a business is definitely on the radar. I don't know if any other. I'm sure there's other people, but I haven't looked, and nor do I want to look, because I like Cody Sanchez. These two videos that she did, how to buy a business with no money in 2023 for, it's about a 10-minute long video. And this video here, the 7-figure side hustle no one talks about, for 8 minutes, is a very, very good use of about 18 minutes. And I highly recommend, if you're even thinking about buying a business, that you go listen to her information. Not to say it's easy, nothing's easy, but that's just the way.
All over the earth, God is raising up a new breed of wealth builders who will use their money.
Okay, so let's dive into the stock market a little bit. So like I say, the relevance to the Fed, when the Fed talks, stock market goes berserk. When Elon Musk says something, it does. So, it's so volatile. So what we ended up doing when we lost the $1 million, for those of you who don't know what kind of Starter Inc. was, we lost $1 million in the stock market. Why? I had a financial advisor paying him 1% to help do so. So even though I take full responsibility for that because it was my money, I was trusting somebody. I don't ever recommend, and I don't give advice because I'm not qualified to, but I wouldn't pay a financial advisor a commission ever again. Perhaps by the hour to help me figure something out, but not commission. So, this guy had about a $3 million account, and it dwindled to $2 million. So he was going to make $30,000 that year to do it and to manage the account, which he had primarily weighted in tech stocks. And it dwindled down to $1 million. Now, had I not gotten out of it, some of that would have came back. But it's too volatile for me. So that is why the whole stock market in general is. But prior to that, I knew nothing about the stock market. That's why I was paying the guy. And now I know a little bit. I know enough to where I can manage my money. I'm doing some trading, and I have my accounts, and I have an idea what it is. I did transfer over to commodities and energy sector just because I don't like the volatility. I want to preserve my money at this point. Although it can make you, the Teslas and the Amazons and the Microsoft and Apples, they can make you a lot of money. There's big swings. I'm not really like that. So, but what I do pay attention to is the macro of the whole world about what's happening. People didn't even know what macro meant a year ago. And on the macro side, CME Market Watch CME Group will they're forecasting a quarter point raise, 85% is forecasting that next Wednesday. So then what I'm going to do, weekly what I like to do is I like to show what our accounts are doing on the stock market, and whether it's our accounts or not. But the SPY's up today a little bit, trading around 441.40. Very critical point right here. You can see there's a double top. I know there's no such thing as a triple top. There's a top here, depending on whether they break that or not, where it's going to go. It could retrace back down and then go back up. It really all depends on what happens with the recession in the future. Here's the volatility index that is down for the day, extremely volatile. The dollar, I don't have the dollar in here. I have the gold. So we've got gold up for the day, trading around 1988, almost hitting the 2000 mark. It's if I show this on one let's see, let's do it just for fun on gold. Here's a 5-year chart. So it's almost at its high. And that high was back in COVID. Okay. But the world has changed. We're not, I mean, the dollar is way down. And it usually correlates with the dollar. Depends what happens with the dollar in the future. But gold is going to be something we believe that is going to be a good place to hold. So we're in a long-term play on gold. We're in a long-term play on silver here. You see this big rise in silver. A lot of the easy money's been made. So we have some hedges down here on our trading accounts, but right now we're looking really good on silver. We don't own Bitcoin, but Bitcoin itself is it's at 29.3, doing pretty well if you're a Bitcoiner. Depending where that goes. Crude's actually up for the day. It doesn't appear to look like that. Let's put it on the 1 day. So yeah, crude's up for the day. Crude's another one that we're looking at as a long-term play. We're not looking at any of these for. I frankly don't look at it every day. I do look at it weekly. I like to check in on it. We're in the trading, we do like now that, when I lost the $1 million, I'm like, hey, I gotta preserve this money. Hedging it with options is pretty much like insurance. So we have on our big positions, we have hedges in there that we can minimize the loss. But crude's one of the ones that we are long-term bullish on just because of the way this world is right now. No drilling, just a lot of stuff happening. They want to make all cars electric, but it takes electric to do that. It's we believe that they're going to have to broaden the energy sphere. We think it's going to be a good sector for the next 5 or 10 years. So there's USO up for the day. Thank you. Here's the Russell, which is the small caps. They remain to be weak except for today. But a lot of that might be swayed by the regional banks and their situations. We're not really sure what's happening. Uranium is down a little bit for the day, but it had a big spike up this week. If I put this on the weekly, here's at least the 5-day. You can see it's obviously gone up in the last 5 days, and it's kind of just muddling around. Uranium's a long-term play for us. We don't look at it except for weekly now. Copper, same thing. We're looking at copper for just as a long-term play, like what's going to happen. Here's the copper futures. We'll just kind of see what's happening there. I don't own Apple, but I show Apple here just because it's really popular. It was over 200 back. Actually, was that? Let me just look at that, make sure I am saying the right thing here. No, it wasn't. It was at. Oh yeah, it's doing pretty well. I mean, it's at 168. So over here it was at 175. So it's due for a retracement, but we will see what happens because there's a lot of other things that happen besides the Fibonacci retracement, which is you take the run from here to here and retraces about half, which it almost did right here, and if you go from here to here, it's going to retrace eventually and then either go up or down, depending on a lot of different factors. Oh, yeah, that's right. I'm sorry. I was talking about Tesla. Tesla was over 200. How do I know that? Because my son owned it, and he was kind of bragging about it a little bit. So, yeah, back in September, it was up at 300 and had a huge... Just look at this just for a minute. Don't want to bore you guys, but from Tesla's stock from September to January, so in 1, 2, 3, 4 months, went from 312 to 105, and that was part of my $1 million loss. Now, I did get out of it and went to more of the energy sectors, which is more of a conservative long-term play, I believe. But just think about that huge spike there. Then all of a sudden, or loss, I'm sorry. Then it came back from 100 went to 214, and then it's just kind of muddling around here. So, what to do with it at this point? Anyone's guess. Okay, because that to me is what it is. So here's the Dick. Sorry. So I got to move this up here. Let me just do that now. The Dixie can go up here, and here's the dollar. So the dollar is just kind of muddling around. It's at 101. It's almost at its low. If you look at the 1 year, which is what we're on, it's almost at its low. And a lot of this is political. We really have no idea what's going to happen there. We just got to watch the charts and see what they do. Hey, let's dive into the articles. We'll breeze through this real quick. I'd like, for those of you who don't follow this daily on the website, I'd like to breeze through some of these things for you real quick. We put, we usually post a couple, 1 to 3 articles a day. Things that we think are important about certain things. Sometimes we just report stuff that's just about the news in general. Don't like to be too biased. I like to keep this informational. But this whole Biden raising the cost for home buyers with good credit to help risky borrowers is a real problem for me. I mean, if anybody like agrees with that, I'm perfectly, it's okay. You don't have to watch the channel anymore. But the fact that somebody like me and a lot of the people we know and that we teach our kids to keep you good, pay your bills, keep your credit good, so you can, have good credit. And I know there's people that are less fortunate that don't have, who didn't pay their bills really, and don't have good credit. But there should be no correlation. I should not be at a detriment because I really cared about my credit, and not that somebody doesn't care about their credit, but somebody has bad credit, why should they get a better rate? That does make no sense. It's going to be an absolute failure, and it's a big thing that's wrong with a lot of things in the world. But why it's important for Investors News Channel, it's a whole part of the whole macro scene. And when you see what happens in the government and the politics, it's absolutely crazy. Now you can get really, really nuts about it, but go listen to some of the Rebel Capitalist George Gammon stuff, and you can get a better feel for what he. Matter of fact, on this article, we reference this on the full article here. George actually does a little breakdown. Here's George over here. George has a breakdown of this that's actually pretty good, of saying what the government's actually doing, but it's crazy. The commercial government was run deeper than in the past. So commercial real estate has experienced its share of busts in recent decades, and this one is different. Landlords are contending simultaneously with a cyclical downturn with secular changes in the way people work and live. That I did not write that. That seems like a lot of big talk, but basically, the commercial real estate's in trouble. And commercial real estate, if you think about it, you get the world gets shut down for a couple years, and inflation spikes, so they raise all these rates. They raise whatever the Fed rate is. I know that the borrowing rate is, if it was at 3 now and it's at 6, we just saw it's at 6.7 now, it's over double. Well, in the real estate sector, you got the same problem. You have these huge developments happening, and when they go to refi these or close these out at the end, and they thought it was going to be at 3%, yet it's at 6%, that's double the carry cost. And that is going to trickle down to just everybody, and we don't really know what's going to happen with that. We just know that it's a problem. So it's a good article on that. This was an interesting article that these people did. For those who don't know, my background is in construction. And what these guys did was they bought a high school. They bought an abandoned high school and turned it into apartment buildings. Now, I'm from California. I tried to turn our office building into 3 little units, and that was going to be $1 million, and it was really difficult with all the things that they tried to make you do for 3 units. It was absolutely crazy. But they bought the high school for $100,000 and $3.3 million to convert it into apartments. And I think there's only 19 of them. But at any rate, it's interesting if you're into that, if you're looking for ways to invest and so on, and that's one of your cup of teas, you might want to look at this. There's an article here on Rick Rule. So anything with Rick Rule, he talks about gold and natural resources. Again, I came from losing $1 million being in the tech sector, and although the tech sector can make you a lot of money, it can lose you a lot of money. Not to say that the gold, natural resources sector can't. They all can if you don't pay attention to them. But being in the tech sector with $3 million with no hedges and no insurance, as opposed to now being in the commodity sector with hedges and keeping an eye on it like every morning, like a couple hours in the morning, is a big deal. This guy here, Rick Rule, has been doing this 40, 50 years. A very, very articulate, very, very smart guy. And this is a very, very good article talking about what he's going to do with his money in the next year as things unfold, because he doesn't know how it's going to unfold. He's going to wait till it unfolds and then act. It's pretty cool. I like that a lot. Private lending in your 401ks. We do talk a lot about 401ks with self-directing, whether it's real estate or precious metals or buying a business. Go talk to Cody, see how that works. But you can also do private lending. You can lend your money out of your 401k and do that privately, and there's an article on that. There's an article on why the IRS reminds the tax-exempt organizations of annual May filing deadlines are here. So check that out if you're into the taxes. Macro Voices this week had David Rosenberg, and again, you can go. I highly recommend that you listen to Macro Voices. It's usually about an hour a week. And they discuss recovery, how to recover from all-time highs, the market outlook, interest rates and inflation, credit crisis, the gold and de-dollarization, impact on China's recovery, and precious metal and energy. So that's what we got for the website this week. Let's look at this is Market Watch. Look at the note for next week. We're at April 28th. Like I say, there's some stuff that on this week's major U.S. economic reports and Fed speakers. Here's the schedule. The notable is at 2 o'clock Eastern, which is 11 o'clock Pacific. The Fed is going to do something with the rates, whether they keep them where they're at, raising a quarter or something else. We'll know that at 11 o'clock. And then, of course, Powell does his little press conference after at 2:30 on Friday. There's the U.S. unemployment report and the consumer credit report, and other little things in here. Those are the notables that I am looking at. And after that, we are next week. Let's see. Before we get into what we're doing next week, I did want to talk to you or show you guys this. We didn't put it on the website, but Stanley Druckenmiller, who is again a famous trader, talks about billionaire investor Druckenmiller shorts the dollar after biggest miss of career on Fed rate review, and what. This got a lot of heat from a lot of people. He's a very respected guy, but he's talking about the dollar really crashing, and it does matter in the grand scheme of things if you're doing investing. So if you want to take a look at that, it's over on Yahoo. Here is Pace Morby's sub-2 site that I thought was interesting if you want a deeper dive into it. And then the CPI index. Does the next release is May 10th. So a week from Wednesday, we'll get the next CPI, which will make the markets go absolutely crazy again. So next week, we're going to talk a little bit more about how I lost, or what I learned from losing the $1 million in my 401k. And we'll, of course, have up-to-date more information for you next week. And we will see you then next Friday. Thank you.